Imagine you're running a small, brilliant bakery that suddenly finds itself in the same city as two giant supermarket chains selling bread cheaper by the loaf. You have great recipes and loyal customers, but the pricing pressure is real, and so are the quarterly bills. That's the story for Supermicro Computer, SMCI, right now. Big orders and big ambition, mixed with analysts' tightening price targets and a history of missed quarters that won't stop haunting the company until management proves otherwise. Smci merchant recently trimmed her SMCI price target and reiterated a hold. Goldman's Miking kept a sell and cut his target to $26. Both moves arrived just ahead of Supermicro's Q2 FY 2026 earnings season and added to market jitters. Wall Street consensus for the quarter varies by tracker, but a commonly cited set of estimates shows a next quarter EPS of about 49 cents and revenue expectations in the $10b range. Some services list the current quarter consensus at 39 cents and FY 2026 EPS around $1.70, with FY 2027 EPS jumping to $2.54, a lot of data and a reminder that analysts don't always sing from the same hymn sheet. The immediate setup: price target cuts arriving before earnings. Two juicy headlines converged. A. Smci merchant adjusted coverage and price target chatter has been bouncing around. She's been a visible voice on SMCI. And B. Goldman Sachs Miking reiterated a sell and lowered his target to $26 from $34. Those hits matter because both firms are influential. Citi's view matters to a wide audience of institutional clients, and Goldman's sell-side calls filter into hedge fund screens and algorithmic flows. When both throw cold water on a stock in the week before earnings, traders start recalibrating risk fast. Why do these moves land extra hard right now? Because they're timed before an earnings event. Earnings season is a moment of truth. Guidance, bookings, margin commentary, and management tone matter more than ever. When analysts lower targets before those dates, it raises the bar for management to prove them wrong, or validates the caution if management misses. Tip: when two big shops line up cautious guidance the week before an earnings release, be alert for volatility. What Wall Street expects for Q2 FY 2026, and why estimates look like a patchwork. If you pull different analyst trackers, you'll see slightly different numbers, because everyone models slightly differently and the company's guidance has bounced around. Two representative data points worth knowing. Aggregators such as Barchart show average EPS estimates for the coming quarter at about 39 cents for the current quarter and 49 cents for the next one. They also list FY 2026 average EPS at $1.70 and FY 2027 at $2.54. These numbers illustrate the market's view that 2026 could be flat to slightly down versus the prior year, before a big rebound in 2027. Other headlines and trackers summarize near-term revenue hopes around the $10 billion range for quarters in fiscal 2026. One tip sheet put the Q2 revenue expectation at roughly $10.42 billion. Take these as indicators rather than gospel. The variance in consensus reflects real uncertainty about order timing and margin composition. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. Bottom line, street estimates are not monolithic. Some firms expect modest EPS erosion for FY 2026, then recovery in FY 2027, others are more bearish on margins. The variability in forecasts is exactly why SMCI's earnings calls are high-drama affairs. The record of hitting, or missing, expectations, the ghost that won't leave. Here's the part that tilts analysts toward caution. Supermicro has a recent history of missed targets or guidance hiccups. Reuters and other outlets reported a notable Q1 FY 2026 miss. Revenue and EPS were below expectations, and some market write-ups now say the company failed to meet expectations in multiple recent quarters. One data aggregator even summarized 5 of the past 8 quarters as misses or disappointments. That pattern matters for 2 reasons. Trust and credibility. repeated misses erode the market's confidence in management guidance. When the company gives guidance, investors ask, will they hit it, rather than taking the number at face value. Valuation risk. High-growth stocks priced for perfection get punished more when they disappoint. If investors were expecting flawless execution and then see repeated misses, multiple compression can follow. So yes, past misses are not just a historical footnote. They are a structural part of the risk narrative that Citi and Goldman are reacting to. Why analysts, and markets, care about the next quarter's revenue and margins. For a company like Supermicro, the mechanics of the business create big, lumpy swings. Large customers, big orders, a couple of hyperscalers or cloud customers can place enormous rack orders. That's wonderful, until one of them delays. A single renegotiation can shift billions of dollars in near-term revenue. Component timing and price volatility, DRAM, HBM, NICs, and GPUs are commodities that swing in price and availability. If memory spikes or GPU allocations tighten, margins can vanish even while revenue looks healthy. Price competition. As the AI server segment becomes more competitive and design wins standardize, pricing pressure is harder to resist, and gross margins compress. That's the issue Miking flagged at Goldman when he pointed to single-digit AI server margins and erosion from the 2022 levels. When the next quarter's revenue or margin hint looks weak, analysts respond fast, they revise models, and price targets fall. That's what you saw last week. The Citi and Goldman notes, what they actually said, clear and simple. Citi/ASIA Merchant. Citi has been an active voice on SMCI. ASIA Merchant's coverage has included a $39 target in prior months, and coverage notes that whipped around $48, $39, $37 in various updates. Citi's communication tilts toward cautious neutrality. They see opportunity in AI servers but worry about margin and competition. The key message to clients is, hold and watch execution. Goldman/Miking. Goldman kept a sell rating and cut its price target to $26 from $34, arguing that while demand is solid, margins have declined materially, to single digits for AI server platforms in some forecasts, and competitive dynamics plus memory price risk make the near-term valuation vulnerable. That's a stronger bearish signal because a sell rating from Goldman often triggers risk decision processes at institutional desks. Analysts don't always agree. The spread of price targets for SMCI remains wide. Some firms are aggressively bullish, others deeply bearish. That divergence is exactly what makes stocks like SMCI swingy, headline-driven, sentiment-sensitive, messy. Note this as well. It is written in Revelation 14 verse 7 that, fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this, I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.